Okay, welcome everybody. This is Investing with IBD podcast sponsored by Vantage Point. It's Wednesday, April 28th, 2021, and I'm Justin Nielsen, IBD's head of market research, and I'm joined by my co-host, Alyssa Coram, multimedia content editor for IBD. How are you doing today, Alyssa?
Hey, good.
Good. Well, I'm really excited about our guest today. Absolutely one of the nicest people that you'll ever meet. We have Kathy Donnelly joining us today. Now, she's a prop equity trader specializing in IPOs. She's also co-author of the book, The Lifecycle Trade. A lot of stuff about IPOs in there and how they kind of start out and everything. Also worth mentioning, she's done an Ironman triathlon. She's got an IBD meetup out there in Denver that is really great. A lot of great people there. And she's got a background in electrical engineering. So how are you doing, Kathy?
I'm doing great. Thank you so much for having me back on the show.
Absolutely. A pleasure. And we'll be starting out with a quick talk about the current market, how Bill O'Neill has influenced Kathy's trading career, and then we'll take a look at a few IPO themed stock ideas, a lot of area to cover today. So Alyssa, how about you start us off?
Okay, Kathy, great to have you back on the podcast. 2021, it's no 2020. Market conditions a little bit different this year, but the last couple of weeks have been looking better after a bit of turbulence. What are you seeing in the market right now?
Yeah, listen, it's kind of funny. I was talking to some friends of mine about this the other day. It almost feels like we're kind of struggling. We're trying to figure out what growth stocks are working. And that's what it should have been like, I think, in 2020 after the big, bear market. But everything worked so fast after, we had one follow through day and then that was it. And it worked. And now it feels like here we are, we're in a confirmed uptrend, but yet we're kind of, can't really find any stocks that are really working. A lot of the ones that worked, are now going sideways or going down. And, we're approaching all-time highs again. So again, we're hitting some turbulence. So it's kind of funny. I felt like, we were taking shots. We should have been taking more shots and hard to find stocks working in 2020 after that big bear. But now it feels like that's what's happening now. But yet we're already in a confirmed uptrend. Does that make sense?
Well, it's funny that you say that, because one of the things that we were talking about is how 2020 really seemed so forgiving in terms of rules. If you follow them, great. If you don't, it's not a big deal. But 2021, it seems a lot more normal.
Yeah, I mean, I just feel like I haven't been training as much, and I'm just watching. I'm watching a lot. I'm trying to be there. I like to use the word stalking. I'm stalking a lot of stocks, and I even told myself, earlier this year, like if I have to wait 6 months to make a trade, then I need to be okay with that, because I don't want to just buy anything. I mean, there are stocks to buy. There are setups out there. But, we have a growth stock investing system, CAN-SLIM, and I want to be very, very particular because as we'll talk later, it was really just a handful of stocks over many years that really made a difference in my portfolio and really life-changing stocks. And it really wasn't that many. So I really want to be very selective.
And, another thing about this year is growth stocks aren't really a lot of the stars like they were last year. So it seems like that has made it a little bit tricky as well. How have you been dealing with the sector rotation that has been very prevalent this year?
Yeah, I like to think of sector rotation as the growth stocks are basing. I mean, not all of them. Some of them aren't working at all. But when I think of sector rotation, I think, okay, there's basing going on. So there's stocking. There's stocks I need to stock. Maybe the ones I missed that I want to get in, or maybe the ones that, will be ready soon. Maybe they're coming out of that institutional due diligence phase that, we talked about in the Lifecycle Trade about how the IPO basis, IPO comes out, it goes up or it goes down, and then it goes sideways for a long time. So sector rotation to me is, a time where I'm watching and I'm stalking and I'm not necessarily actively trading because I'm looking for those perfect setups. So that's really how I'm approaching it.
Well, and in a way, when we look at the NASDAQ composite, we kind of see almost this base pattern that's formed in the NASDAQ composite itself. We've got kind of this cup with handle that's recently just kind of gotten back above the 14,000 level, almost, been touching the area that we got to those old highs back on February 16th, but not quite surpassing those previous highs. So what is it that you're looking for? These stocks that you're stocking, what is it that you're looking for to take action on? Is there something that you're looking for in the market or something on the individual stock side?
I'm really watching the stocks more than anything. I mean, obviously, I want to know where we are on the NASDAQ and the S&P, right? Because we all know
there's been a lot of leadership from the
yeah.
S&P 500
well,
this year.
75% of the stocks are going to follow the market, right? We know that. But there are always going to be those ones. And if let's just say we weren't in a confirmed uptrend, there's going to be those strong stocks that are going to go before the uptrend starts, right? So I'm watching those bases. I'm looking for the accumulation. I'm looking for tight action. And, if they start going early, whatever early means even right now, since we're already technically in a confirmed uptrend, then, I need to be there. So I'm watching those trend lines. I know you guys like to watch those too. I'm looking for the volume to come in. I'm looking for that accumulation. So, if one meets that, then I'm going to try it. I've got my stop loss if it doesn't work. But yeah, I'm watching more than taking action. And also liquidity is important to me. I don't see a lot of really big liquid stocks that have set up as much of the ones that are of lower liquidity. And $20 million is really my minimum. That's kind of what we saw when we did our research of the ones the institution is really, are the quality ones that they can get in and out of. And those are the ones that I want as well. But even 20 to 100 million is a little illiquid for me, I feel like.
And when you say 20 to 100 million, you mean the average daily dollar volume. So
exactly,
right.
Yes.
So looking at the last 50 days of average volume and then just basically multiplying that by the stock price.
Mm-hmm. Yeah. And with it being earnings season, I feel like that has an impact on how you're stocking these stocks. How often would you say is that earnings move the catalyst for you entering a position and potentially winning trade?
That's a great question, Alyssa. And that's exactly what, I look for. I look for those big gap ups, right? Because Bill said, you see a gap up, you can buy gap ups. So it's the only time you can buy extended. So yeah, I think, we're still early in earnings season. I'm looking this way because that's where my calendar is. So I have all the stocks written down that, when they're reporting. But yeah, gap ups are definitely a catalyst, and that's going to get a lot of these ones going or not going. And like you guys, I don't like to buy the day before earnings or 2 days before earnings, but I'm watching it after earnings. And and I'll either buy it on earnings or I'll wait for some sideways action. Scott Sinclair and those guys have talked about their buying gap up rules, and I'll use that to get into stocks for sure. So see. Still early.
And that's one of the things that, I look at the NASDAQ composite and what it's doing right now as a good thing. A little bit of that sideways action in the market, a little bit of that sideways action in your individual stocks. And then, with earnings season upon us right now, it's kind of like I'm hoping for some of those pops to create some actionable things. Now, you mentioned earlier how it's funny that you're kind of saying how you're doing all of this stocking right now and waiting when we're already in this confirmed uptrend. It's part of this is, we have had some pullbacks. I mean, the NASDAQ composite was underneath the 50-day moving average line for a while. It looked like we were potentially going into a more serious correction, but then it just righted itself. So how long have you been stocking things? Has this been a more recent thing, or have you been stocking for a while? And how hungry is that making you, I guess, for your meal?
Yeah, as investors, as traders, we get that urge to trade, right? So it's hard.
You do a lot of yoga, meditating, physically sitting on your hands. I don't
know. Well, for a long time, trading was a part-time. I mean, it was full-time, but it was part-time, right? Because I had a full-time job, and then really all my work was done in the evening for trading. So when I transitioned from corporate life to, I guess, full-time investing life, I really didn't add more time to how much I spent on investing. So now this is where I train for my Ironmans during the day. I'm working out in the morning, and sometimes I'll talk to a friend and I'll be like, what's the market doing? Because I might not even really know. I'll know what my individual stocks are doing, absolutely, and the stocks that I'm stocking. I know what they're doing, but I'm not necessarily looking at the market. But yeah, I mean, I have been holding some stocks since 2020 that have had some really strong runs. I only recently sold Zoom, so those keep me in the market, right? I still have some of those stocks that are holding the 40-week. And so those, keep me in tune with the market. And then I've got the ones that I'm watching. And I just keep trying to remind myself, it only takes one or two in a year. That's what Bill said, to really make your year. And I've just really, more than ever, and I don't know why, I guess maybe because I just recently was looking at my whole investing journey. I'm really just trying to focus on sitting on my hands because I don't want to be tied that much to the market.
Well, speaking of your investing journey and lessons from Bill, that's exactly what we're going to talk about when we come back. So we'll see you on the other side of this commercial break.
Want to dominate the stock market this year? With the latest stimulus now in your pocket, you may be guessing which trades are the best to invest in. But with Vantage Point, you don't have to. Visit www.freestockcoaching.com and find out how Vantage Point's AI technology can forecast stock market trends up to 3 days in advance with incredible accuracy. Vantage Point's patented technology analyzes huge quantities of global data in seconds. Stop guessing. Check out www.freestockcoaching.com and experience Vantage Point for free. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance.
Welcome back to Investing with IBD, sponsored by Vantage Point. It's Allie Corum, joined by my co-host Justin Nielsen and our special guest, Kathy Donnelly. Now, Kathy, picking back up where we left off, talk to us a little bit more about your investing journey, because you do have this somewhat unique approach to catching these winning stocks and riding them for long periods. We were talking about Zoom before we went to commercial break, but talk to us about your journey and how it's led you to become the trader you are today, and these unique strategies that you are using to be very picky when it comes to your stock selection.
Yeah, well, it kind of stemmed from, so you mentioned I'm part of a meetup. I run the Denver IBD meetup, which will one day be in person, hopefully.
Yes.
But I also participate in the Fort Collins IBD meetup, which will also one day be in person. And we were talking about our investing journey. So just kind of off the top of my head, I was writing down the key stocks that I feel like really made a difference in my career. And when I think about just CanSlim specifically, I've been doing CanSlim system for about 14 years. And I wrote down, and it was about 20 stocks in a 14-year period that really made the difference. I was like, wow, only 20 stocks? Like, that was just really weird to me. That's a stock and a half a year. And I made this little chart with all the little icons to kind of show the different.
Yeah, I love that you did the icons. That's great.
Yeah, wasn't that fun? Yeah, I really like this chart. And Apple, that's one of the main, that was a key life-changing stock for me. And even Tesla, key life-changing stock for me. And then of course the other ones were essential too. But, I started this system, right 2006, 2007. And, I was just learning. I had seen Bill speak at a level 3, and it was Apple was really my first stock that I kind of bought early. And the story is, I actually heard from someone who said, "Oh, Bill's buying Apple right now." and luckily I was like, "Oh, that sounds like a good idea." So
Justin could probably confirm exactly when Bill was buying Apple.
Yeah, absolutely. Yeah. Mm-hmm.
So the good news is I never heard that he wasn't buying it. And I mean, in that, okay, I mean, good news or bad news, I don't know. I remember one story, Justin, you told once where, Bill will change his mind really quick. Yeah. So
and he never tells you when he's selling. I mean,
right, exactly. So anyway, and as you can see, it had a great run up. I mean, 2009 was the start of a great bull market after the financial crash in 2008. I made 300% in 2 years. But what I really did good on this stock on accident, complete and total accident, was just that I kept buying it. I was just thinking about, Bill saying that he was buying it every time, like tight action and new highs, and really where I sold it, knowing what I know now, I would have never sold it. I think it was peer pressure. I don't know what it was. I felt like, oh, I guess I had to sell it at some point, but I don't have the records to prove any of this, but I mean, this, I remember I doubled like all my money, like not just in this stock, because I had bought it so many times, and I don't even remember how much money I had back then, not a lot. So I guess, in my mind, being young and naive, that's probably sometimes the best thing. But that's really what's told me, oh my God, if I can do this with this stock, and I'm still learning, where can I be then later?
Well, and sometimes you just need just that little bit of success to give you a little taste of, oh my goodness, what's possible. If this, now you have to be careful, because what some people do is they extrapolate and say, they had a good year, and they start thinking that every year is going to be like that, or every stock that they have is going to be like that. So put this in perspective. You talked about these 20 kind of life-changing stocks, Kathy. How many stocks would you say that you had to kind of test out or try before you found that prince after kissing all those frogs?
Yes. Well, I unfortunately did have a lot of frogs for sure.
Well,
and
that's the process,
that is totally the process. But, we talk about the win-loss ratio a lot, and it can be like 50%. I mean, on average, right? That's probably what it is for a lot of us. But when we get the ones that are the right ones and we handle them well, then it doesn't matter that your win-loss is 50%, because we know how to cut our losses.
Yeah, as long as you keep those losses small.
Exactly. As long as you keep those losses small, which, that was one of the rules I used to break when I first started the system too. I would buy extended, and the losses would be too big. If I remember the two big things that I didn't rein in the beginning, which I'm sure, we've all gone through. But, going through this process of thinking of, it was only 20 stocks in like this 14-year period, really, Justin, I think that's what's really keeping me on my hands this year, because I've never done this before. I mean, literally for this podcast and thinking about it, that is really changed me for this year, to just be more calm and just really waiting for those perfect setups.
And another part of your process, of course, is all the research that you've done about IPOs, and then that institutional due diligence phase, which you talked about a little bit in the first segment as well, and then the institutional advance phase. Can you talk a little bit more about that, and then put it into context with your Tesla trade, because that was really one of the model stocks that you started using?
Yes, that's a great lead in, Alyssa, because Tesla was a life-changing stock for me. That was my second life-changing stock after Apple. And, I didn't even know I was buying it out of the institutional due diligence phase when I bought Tesla. And looking back, it's like, wow, we didn't have a name for it, but that's exactly what I was doing. It had that initial rise after the IPO base or consolidation, and then it just went sideways. And that's that due diligence phase. And then when that arrow is where I bought it, right? It was a gap up on news that they were going to have earnings. It wasn't earnings report, but that they were going to have earnings. And that's where I bought it. And then it had a gap up a few weeks later, and I bought that. And I also bought that along on the way up, like I did Apple. And did very well. And you'll see there, I then sold it soon after it broke the 40-week line. And, that's why I think, looking now today after doing that research, confirming that that's for me the best time to buy, because I can buy early and then hold on. The two institutional advance phases are the key thing that I want to be in. And if I look at all the 20 stocks that I had that we keep talking about, 12 of them, 12 of them. So more than half of them were in an institutional advance phase. And that just ties in with what Bill taught us, right? IPOs is where we have the most potential for the biggest runs within those first 8 years. And after doing the research, really, I want to be in there after like that first 6 months, 1 year, where it's had that time to do that due diligence phase. And so that's so, so what I'm looking for 2021, it's the IPOs that came out in 2020 that are now 1 year, 6 months later that I'm watching.
Those are the ones that you're stalking. And also, can you talk to us about the kind of growth that you can see in this institutional advance phase? Can be pretty astounding, but you also always have those sell rules. How much of a cushion are you looking to get in perhaps this institutional advance phase when you're looking at that 40-week line as your sell signal, which can be a little bit of a drawdown from highs?
Right.
Yeah, absolutely. Well, what I like to do is, and this is important, and I probably should have brought it up earlier, but all my position sizes, I try to make 12% or more, but really 12% to start. And then I say or more because I want to add and get it to 16% so that eventually it's a 20% or more position. For that 40-week line that you were talking about, I need at least 100% or more. But when I go into any trade, especially since I'm trying to get in early, right as that advanced phase is starting, I'm already looking for 100% or more, like minimum. That's like my number one thing. So I go in with that in mind. And then once I get that 100% or more, that's where I'm saying, okay, now I can turn this into a potential 40-week hold. And in conjunction with that, I'll also look at a mental capital preservation stop, which is another thing we talk about in the book, which is making sure I retain at least 50 to 60% of my gains. So in combination with the 40-week and making sure I return those gains, that's how I try to get that year and a half, 100% or more gain for the long run is my strategy.
And I think last time you were on the podcast with Arusha, you mentioned how a lot of times those two points will coincide, or at least very close. A lot.
Yes.
Yeah. So yeah, that is very interesting. So now, I'm sure, as great as you are, Kathy, not everything you touch turns to gold, and not everything goes up 100%. So how do you handle those ones that you don't get the 100% gain on? Let's say, 20%, 30%. What kind of different sell rules are you using before you get to that 100% level?
Yeah, so definitely for those, I'm looking for those traditional, well, I guess I don't know traditional, but a lot of what Bill would talk about, the 10-week line. Did it break? And I know you guys talk about it a lot, the decisive break of the 10-week line. So if I'm only getting the 40% and then I'm starting to get these big breaks of the 10-week line, and now I'm at a 20% gain, it's like, okay, I got to take the 20% because I'm not gonna wait that out. It's consolidating, too quickly. I want those ones that advance from the first stage base to the second stage base, really, those ones that are going like 100% or more in that time period, or 50% or more. But if it only goes up 40, 50, then I'm looking at those intermediate term rules like the 10-week line.
And how large are you comfortable with a position size getting? Because if you start at 12.5, and you were mentioning that there were a couple of those areas on Apple that you were adding to it, and how you want to get it to 20%, but if you've got something that goes up 100%, you've got a lot of capital appreciation there too. That's also increasing that position size potentially as a percentage of your portfolio. So how comfortable, where do you start losing sleep? At what level does it get maybe a little bit too much, especially if you're going to be holding something down to the 40-week moving average line and potentially taking a larger drawdown?
Yeah, I get that question a lot. And, I guess because I've been doing it for so long, I'm not going to say I don't feel anything.
Right.
Because I do feel like, oh man, like that's a lot. But then I got to bring it into perspective. I'm like, well, it hasn't even broken the 10-week line, or it hasn't even touched the 30-week. And most true market leaders, I've also observed, and you've seen it too, they'll touch the 40-week line at least once before they're done. We talk about the 10-week line a lot. I'll touch the 10-week line a couple times before it's either done or starts to base again. But it will touch the 40-week line at least once, consolidate, and keep going. So I just have to remember that, it's just things that remember, the experience, going through the feelings before and knowing, yeah, I'm going to have that drawdown. So yeah, I don't lose a lot of sleep. When I lose sleep is when I decide to buy a really volatile name, especially like an IPO that's just, came out, IPO base, they're always really volatile. That's when I lose sleep, and those I don't like to trade very much. But once I have such a big cushion, I just take it into perspective, and I don't necessarily feel great, but I know what the future will be. And I know what will happen, I guess. I know I'm always going to retain a certain amount of gain.
Right. Mm-hmm.
So I can't, in my mind, ever go wrong as long as I retain those minimum amount of gain.
Well, it's almost that feeling of playing with house money to a certain degree.
Yeah, exactly.
Wow. Your mental strength is very impressive, Kathy.
Okay, when we come back, we're going to continue this conversation, and we're going to get into some of the current ideas that Kathy is stocking, especially in the IPO market. Tired of reading about other people getting rich in the stock market? Today is your day. Vantage Point's artificial intelligence has predicted countless market reversals, helping traders weather any storm, up to 72 hours in advance. Visit www.freestockcoaching.com and find out how their AI automatically recognizes global market patterns well ahead of the news to help you pick the best trade. Go to www.freestockcoaching.com to join a free live training session today. Don't delay. Save your seat now. Trading involves financial risk and is not suitable for all investors. Past results do not guarantee future performance. Okay, welcome back to the Investing with IBD podcast, sponsored by Vantage Point. It's Justin Nielsen here, along with Alyssa Corum, my co-host, and our special guest, Kathy Donnelly. And we've been talking about some of these big winners you've got, but of course, there's all of these stocks that you're stocking. We had a lot of interesting movement in the IPO market, a lot of interesting IPOs coming out in the last year or so. What's kind of on your radar, Kathy?
Well, like I said, for the long term, more mature, I'm looking for the IPOs from 2020 and into 2021, and I'm looking for a completion of that institutional due diligence phase. And I think there's some potential out there. So I'm looking for that first mature base. After that happens, after that, it goes down and then it goes sideways. And then that's when you're looking for that first base to kind of come up off the bottom. So that's the first thing. Is there
anything, just real quick, is there anything in that due diligence phase that you're looking at specifically in terms of what you're following mutual funds doing, or is it all just technical action? You're just seeing basing action, and that's what you're calling the due diligence?
That's a great question, Justin. I mean, I'm still always looking for those key O'Neill funds. I guess that's what, I don't know if you guys still call them the O'Neill funds, right? So that might be old terminology, but the IBD mutual fund index. I'm still looking for those mutual funds that are in the IBD mutual fund index to be accumulating shares in that stock. So I'm looking at that. And then I'm looking also to see that there's accumulation of like all funds into those IPOs as well. So I'm definitely, of course, looking for technical action, want to find that first mature base, but I'm also looking for, that increase in fund sponsorship and for some of those key funds to be a participant as well.
Right.
So what is the first one that comes to mind, given all of those factors that you talked about, an IPO in 2020, you're looking at this due diligence phase, perhaps a first mature base. What's at the top of the list with all that considered?
Well, let's look at Snow.
Okay,
Snow is one that I'm stocking. It's very liquid, which we talked about in the very beginning. I want very liquid stocks. And this was an interesting one because it had a really great base in the beginning. We see there a cup with handle base on this daily chart, and it had initial advance. So it had a little pop, and I actually did play that. I played that IPO advance phase. And then, it tanked like expected and has just recently undercut its IPO day one low. And even that base, it looks like it undercut the whole entire base, which is normal. 90% will do that. And so now it's, There we go. Price scale standard.
There we go. For, yeah, for those of you just listening,
Scale matters. Yeah.
Yeah,
I had to
scale
change
matters.
the scaling there. For IBD Live, sometimes we talk about stocks that have been such high flyers, you can't even see half of
Right.
the weekly chart. So got to change it. But I changed it back. Sorry to almost give you a heart
Oh
attack.
no.
there, Kathy.
Yeah, you gave me a heart attack.
Yeah.
now.
This is not the snow I was stalking.
But yes, I'm only stocking, so I don't own it yet. But you
Mhm.
know, there's some potential bottoming action here. It looks like it's just barely trying to get back above that 10-week line. You know, I think it's been trading about 32 weeks. I think I looked. So we're not really at that 40-week point. And 40-week is a good point, right? Because that's when the 40-week line starts to show up on the
Oh, there you go.
and I've observed, you know, we didn't hone in on that when we did our research, but I feel like that's really around the time we'll start to see that first mature base. So here, you know, maybe we're another, I mean, I don't know, we could be another 6 months, we could be, you know, 2-3 months, but this is one I'm watching, still very liquid. Doesn't have earnings yet, but it's got the revenue that we like to see. But this is, again, this is one that I'm stalking, because when it sets up, I want to be ready. And, you know, the earlier I can buy it, the better, you know, and I've got my stop loss rule if it doesn't work. But I want to be there. And there you go. So we've got 3 institutional funds. You see a lot of ownership already increasing. So, you know, that's what I'm looking at. This is one of those ones that it's on the top of my list that if it sets up, I want to be there, you know, because it's got what I'm looking for, the liquidity, the sales, the institutional fund sponsorship. And you maybe some point, you know, it's going to be earnings that gets it really going. You know, we'll have to see.
So how important are the earnings to you? Because what we've really seen in the last few years here is there seems to be this reward just on sales growth a lot of times. And it's almost like, oh, we don't care if you have earnings or not, as long as you have this phenomenal sales growth. So when you've done your research, or has any of that changed in the last few years for you to focus a little bit more on the sales growth versus the earnings growth, or are they both still top of mind for you?
Yeah, earnings is still really important to me, but no matter what, I've got to have at least revenue. If I don't have at least revenue, if I don't have earnings or revenue, then I really don't want to give it any time at all. And I definitely will put the ones with earnings, you know, like kind of like more on top of my list.
Different tier?
Pardon me?
Different tier?
Yeah, a little bit different tier, right? Because if it has the earnings, then I know it even has that much more potential, right? Because it was Bill that said it's the earnings that keeps it going, right? And what we'll see on a lot of these IPOs is it'll break out, it'll do its first base before it has earnings, and then it gets earnings, and then that just catapults it even more. So still super important, but it's not a mandatory requirement that it has earnings for me to purchase it, especially when it's a newer IPO and it's transitioning from that due diligence phase to that institutional advance phase.
Well, speaking of waiting for the earnings, Lyft is another good example of that. It's been around a little bit longer, and we can get in a bit more into the fundamentals, the story, the sponsorship. But I have a question for you about the first mature base that you're looking for in your research. Does that usually happen around new highs, or are you looking for something like this setup right here? It's forming a base heading into earnings next week.
That's a great question. And so you see that really big, deep base that was built pretty much below the 40-week line. And that's pretty sloppy and pretty deep. How deep is that, Alyssa? That's like
48%.
Yeah. So that's pretty deep. That's pretty wide, pretty messy. But Market Smith flagged it, and I would still call that a first mature base. Me personally, Kathy.
Okay.
I don't know if my co-authors would. And if it had, you know, this was, I forget what time that was. So the end of last year into this year. I mean, I don't own this stock, but like that if Marcus Smith specifically is going to pick up a base in that transition period, that would be something that I would try. Now, I didn't try this one because I was actually buying Uber. I honestly, but I don't own Uber anymore. But I picked this one because this second stage flat base that it's making right now looks really good. So, and it's flagging the second stage base. Maybe we could call it a second mature base. And it's still below the turbulence zone. And that turbulence zone is that prior high that was made on that first week of trading right there. So if it can come out of this nice flat base, it's probably going to run into some turbulence at that prior high. But this looks really good. It actually, in my opinion, looks a little bit better than Uber, even though Uber has the better numbers. So this one's really kind of interesting in comparison. I mean, not that that's not a bad base, but, Uber. And I actually, Uber, I wanted to buy it after that gap up of that first mature base. You see there in the due diligence stage, right? Exactly, right there. But that was, the news of the election, and was that proposition going to go through in California for the contractors? And so there's just so much going on with it, and now it's kind of going sideways. And actually, Uber's numbers don't look as good as they have been. And of course, this is about people traveling again and all of that. And that's the other reason why I wanted to look at Lyft. And then of course, Uber's in the same category. But yeah, so this is still, I would say it's still in that institutional due diligence phase until it breaks through that turbulence. I wouldn't say with confidence we're officially in that advanced phase, but it has had 2 mature bases, one pretty deep and sloppy. And now you've got this nice little flat base. So I think they're going to be interesting to watch and see if, they're one of those opening plays that we're going to be seeing this year as America goes back out and travels, hopefully.
Right. And well, I think there's always something really interesting about these, real kind of sloppy bases that kind of, correct themselves. They get tighter, they look better. And while the weekly chart is giving you this longer history, so you can see kind of its faults from before. And, we never like to see things that have gone, these 50% plus bases, but if it can tighten up, then it has kind of a different look to it. But I do notice that you're spending quite a bit of time on the weekly charts. Is that where you focus most of your attention? Or when do you start using daily charts?
I absolutely start with the weekly chart.
Yeah.
I learned that from Bill, right?
Right.
That is, yeah. So I use the daily charts for that, precise buy point, right? Because, the handle forms on the daily first, and you don't want to miss that handle, right? I mean, I think that is key. And also that's where you can draw, potential early buy points too, by drawing a downward trend line. And yeah, and right there, exactly. So, I think those are important. So I will focus for sure on those daily charts to make sure I get the best buy point. But overall, when I'm scanning a bunch of charts, I'm scanning weeklies, and I'm looking for, like, this is a pump and dump pattern where, it just went down immediately from when it IPO'd and created this, very deep, long institutional due diligence phase. And then I'm looking for those bases to be forming right around that 40-week line. And, almost like if it's forming above the 40-week line, that's ideal, right? Just like when we see bases form above the 10-week line is ideal. Here, you want to see them ideally above that 40-week, but not that this wouldn't work, because you did have like that little bitty tight, good looking handle there. Not good looking, but okay.
Well,
are you going to be waiting for this to get into new highs, or do you think you might start nibbling a little bit earlier?
Oh, I would absolutely nibble early. Yes, of course. I really want to get that first mature base if I can, or the second before the turbulence zone.
Okay, ahead of that.
Okay, well, we'll have to see what Lyft's earnings report is. We know you're ready. You're in that stalking position, ready to strike there, Kathy, but we'll have to see. Roblox is another one that we want to get to. Less trading history, of course, just in this initial IPO phase, but yet another company here with a very compelling story in the early going with that strong top line growth.
Yeah, so this is an example of, it has an IPO base, hasn't been trading very long, maybe 8 weeks or so. And I will disclose, I own this stock, and it's unusual for me to have be buying a stock this early. I mean, I'll go 2, but usually no more than 2, because then this is that volatility, and then I sleep at night because the swings can be so wide.
You mean no more than 2 of these in your portfolio at one time?
Exactly.
Okay.
In this stage, you know, in the potential IPO advance phase. But you know, I'm familiar with the story and all the kids that are using Roblox, and just kind of really interesting, or very interesting. I mean, you know, me as an adult, I guess I don't get it, but the kids get it, right? And we got to see what the kids are doing and understand, and don't miss out. So, and this is very liquid, and the pattern it's just so interesting. I mean, you got, you know, some great blue bars, and they're tight, and, you know, did try to break out, but then it came back. I mean, super normal for you know, an IPO to do that. So, and this is one I will say, you know, I was talking about my position sizes being at 12% to start on, because I am buying an IPO advanced phase, and because I know it's going to be more volatile, I do not have a 12% position size. So I do want to make that clear with everybody. I mean, because look how wide it, I mean, it broke out, shook you out, whatever. You know, I give this one a little bit more room, but then again, I don't have the same amount of money into it. So, you know, we'll see what happens here. But I think there's just a lot of potential, and the story's there. So what I'm looking for on this is an IPO advance phase. You know, maybe we get 100% out of it, or maybe we get 50, or maybe we get nothing and then it rolls over. Or maybe we get a stair stepper, you know, it'll go up, it'll base sideways, it'll go up, base, you know, and never really have a due diligence phase, you know, to be determined. But these are all the things I know that could potentially happen, and I'm just watching it from those perspectives.
Well, and that kind of helps a little bit when you have these different scenarios thought through ahead of time, because then you can build an action plan for, if this happens, then I'll do this. If this happens, then I'll do this, and so on. That was one of the things that Bill was always talking about. You know, that's what boot camp is for in the military. You know, to practice all of those things before you get into a situation where you really need them. But now with Roblox, you've got this, and if it does go through that due diligence, you're probably not going to be holding through that. So bringing this back to Snow, you kind of played that for a little bit in that IPO advance phase. Do you find that it helps you a little bit when you've got something that you've maybe played in that IPO advance phase, then you let it do its due diligence phase, and then you play it again? Does that help you, or does it matter at all for you?
No, I think definitely that helps, Justin. I mean, I think anytime you've traded a stock before, I think it helps. I don't know why, but yeah, because I guess there's just some kind of familiarity, and that whole thing about being able to buy something back, you know, and, you know, because you need to be able to do that. And how many times did Bill tell us that, and we didn't do it, and we wish we had. So yeah, I absolutely like to buy stocks that I've bought in an IPO advance phase, and then look for it, you know, in the institutional advance phase as well.
So speaking of having a game plan, you said you own Roblox now. What kind of action are you looking for to add to your position? Is there some sort of early entry that you're eyeing here, or if it moves back above that IPO base buy pointer into new highs, what's your plan for the upside?
So because this is, you know, I was saying, you know, it's IPO based, only been trading about 8 weeks. I know it's going to be more volatile. I'm not looking to add. I'm looking to hold on.
Hold on for dear life.
Yeah. So I'm hoping, you know, it'll be successful. You know, I'm going to get some gains out of it. But at this point, I'm not looking to add for those reasons.
So is it really more when you're in that institutional advance phase that you're looking to really beef up those positions versus just this initial IPO move?
Yes, exactly. So in the institutional advance phase, I'll be looking to, you know, buy that first mature base, and then I'll add along the way at, you know, proper secondary buy points until I get to the second stage base. And I'm glad you asked this question, because I did want to mention this. And then the second stage base, you know, I'll put on another full position if it allows me. And then at that point, I actually will stop adding so that I can hold it through when it starts to get more choppy around that third stage base, or because it may come back to the 40-week line before it starts going again. So I really want to be done with all my ads by that second stage base. So that's a great question.
Well, good, very informative.
So to kind of wrap this up, these are a number of IPOs that you mentioned, but one thing that we've seen, at least in the last couple of years here, a lot of these special purpose acquisition companies, the SPACs, is any of your research kind of apply to these SPACs, or is it kind of its own animal? And is that something that you're looking at all at playing?
Well, I think it's definitely its own animal. And I'm glad you asked the question, because my plug for MarketSmith is that we need a filter so that we know if the stock used to be a SPAC. Because right now, as you know, you can search on blank check, but once it changes to that new company, and you don't know if it was a SPAC anymore unless you just recognize the pattern, which they're pretty recognizable, because when the deal is announced, even if it's not final, it just like goes up. And then when it's final, it like goes up again, and then it kind of tanks. So you can apply the life cycle trade, kind of rules there, where the deal's announced, it kind of has this initial advance, and then it tanks. I mean, I went through a list of 40 or so SPACs over the weekend, and I couldn't believe how ugly the chart patterns were. I mean, there's some exceptions, of course, but they're just like
DraftKings, a SPAC.
Yeah, DraftKings doesn't. Now that's the exception of one of the ones that doesn't look as bad, right? But a lot of them are rolling over. They're already in their 40-week below their 40-week line, and they're creating that like due diligence phase. So what's going to be really interesting is, are they going to tighten up and kind of maybe create this first mature base we've been talking about, where it's actually only maybe 20 or 30% deep, and give us a breakout for then now a more mature institutional advanced run, to be determined. But yeah, that would be a great research project to do further at some point once we see what happens. Because we have an unprecedented amount of SPACs, and it's just blowing my mind.
Well, maybe we'll have to talk about that in the future when we have you on another podcast episode. We'll have to see. But Kathy, thank you so much for sharing your time and your insights with us today. It was great digging into some of your strategies.
Thank you so much. It was a pleasure. I had a great time visiting with you guys. Keep up the good work.
Oh, it's great having you. And that's it for this week's show. Coming up next week, we're going to have Chris Retzler of Needham Funds. So make sure to tune in for that. Signing off for this week, Alyssa Corum and Justin Nielsen. We'll see you next time.
And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.